Kathy has a question. She says, we paid off our mortgage in January.
Nice.
So that's awesome. We are debt free. It's got to feel good. We want to downsize and pay cash for a smaller home, but I am told we cannot invest the balance into a Roth mutual fund. Oh, yeah. So what can we do with it if this is their plan? What do you think?
Okay, well, let me
There's
do
a bunch of different things.
Let me do a little bit of a vocabulary explanation here to kind of to level set. You said I was told I cannot invest into a Roth mutual fund. You kind of combine two different ideas there. Roth is a type of account. It is an account that exists that you can then hold investments in. Inside of your Roth, you can hold stocks or mutual funds or ETFs or cash. But the Roth is just an account type, an account structure. A mutual fund is the actual investment that you're buying inside of the account that you choose to use. That's just like some quick vocabulary 101. So your question is, hey, I paid off the house, paid off the mortgage in January. We're now going to downsize. And I'm going to have more money from the sale of my current house than it's going to require to go buy the new house. So what do I do with the excess? Where can I put it? What are my options? I think one of the great things, if let's assume that this house that you paid off that you're going to sell, let's assume that you and your spouse bought this house and it's gone up in value. And so long as it's not gone up more than $500,000 in total value from the time you bought it, plus any improvements until today, one of the beautiful things about this issue that you have is there's not going to be a tax bill associated. You get to exclude the first $500,000 of gain on your primary residence, assuming you lived there for 2 out of the last 5 years. So you have to worry about paying the tax man. So literally, this is going to be like free cash flow to you. What should Kathy consider doing?
I want to give Kathy a huge compliment. One of the things we talk about on the show is that housing is a use asset. Mm-hmm. Because it's a use asset that you can't basically eat your house in retirement. We tell people we value at a very conservative, of the cost plus improvements. Yep. Because I think so many people have kind of boosted their net worth or their comfort with their financial situation off of just the equity in their house. And we're always like, well, it's hard to turn that equity into cash. Kathy's actually done it. When she does this, when she downsizes, she will actually be able to take some of those gains and use that money above and beyond what it's going to take for these smaller home. So I think that kudos to you for having excess housing funds. Mm-hmm. Now, I love that this extra margin or this extra money, she actually wants to invest it.
Sure.
So I'm all about how she's done that. Now, the problem is the government, because we all know Roth, it's awesome.
It's awesome. Tax-free.
Tax-free. That money grows, compounding growth. Kathy gets it. But the problem is it's so good the government restricts how much you can put in every year. It restricts how much you can put in or convert from if it was traditional IRA. This is after-tax money that's coming to you. So you're probably just going to want to invest it into some type of brokerage account. Yep. And the good news is you can still buy index funds just like you can in a Roth IRA. You can buy index funds in that after-tax joint brokerage account and put that money to work, and it's still going to be tax favored. It's just not going to be tax free like the Roth growth is. It's going to be taxed at ordinary, your ordinary income on the bonds. You'll pay at ordinary income tax rates. The dividends will pay at that preferred lower tax rate for dividends, and capital gains, if you hold them long enough, they'll be preferred as well.
Now, what is interesting is Kathy didn't say, I don't think she said that she was retired. She just said she paid off the house and they're thinking about downsizing. So a great thing to do whenever you have like a capital flow into your life, is you ought to check where you are in the food. Brian, will you hold up the financial order of operations for me?
Oh, gosh.
This is a 9-step tried and true process to tell you what to do with your next dollar. Well, when you sell this house and you have a lot of next dollars coming your way, this might be a great time to assess, okay, if I'm still working, have I maxed out my Roth IRA? Have I maxed out my HSA? Is my emergency fund fully funded? Do I need to go back and max out my 401k, 403b, or an employer-sponsored plan? And so long as I've checked all those boxes, then I agree completely. The excess can roll right into that after-tax account. Anytime you have a major life change or a large capital transaction like this, revisiting the financial order of operations is a great step to make sure that you're deploying your dollars as wisely as you can.